So we're going to look at the petty cash book now, and the petty cash book really is one of those books that we use to record petty expenses. And the word petty here simply means that these expenses are very small expenses. They are so small it wouldn't and frequent that it wouldn't make sense that we include these expenses in the cash book. So what happens is the cashier who's in charge of the cash book would then pay out some money to the petty cashier who's in charge of the petty cash book to record these small petty expenses, but rather frequent expenses. All right, so let's look at this question here. The cashier gave the petty cashier a cash float of $1,000. The cash float is the amount of money that is given for the period to cover the basic petty expenses. In this question, the period is the month of November. So $1,000 was given, and the amount spent is to be reimbursed at the end of the month. So reimburse means to give back. So whatever the petty cashier spends from the cash float will be reimbursed at the end of the month. Draw up the petty cash book with the columns for motor expenses, office expenses, cleaning, labor, and ledger accounts. So there will be 1, 2, 3, 4, 5 accounts that will be used. Let me just show you how this will look. All right, so here goes. The petty cash book looks like this. You have your receipts column where you record where you get how much money you got from the cashier as the petty cashier. You'd have the folio that tells where the money is coming from. Of course, you'd also have the date for each transaction, and the details. So what did you purchase? What are these expenses? The voucher number. It should be noted that the source document for the petty cash book is the petty cash voucher, and as a result, we'll have voucher number. Just like in the journal, when it's the invoice number, because invoice is the source document. So for the petty cash book, the source document is the petty cash voucher, hence we put the voucher number. And then the total amount of money, then we're going to have the motor expenses, the office expenses column, cleaning, labor, and for ledger accounts. So those are the accounts for the expenses. All right, so let's look at how we do this. Pretty simple. So let me just split the screen and we go through. All right, so let's start off. So here are the questions. Let me see if I can get it a bit smaller so you'll be able to go through with me. All right, so here goes. So the first thing we do is we will record $1,000 at November 1 as the cash float. So the cash float of $1,000 here is what we will record, all right? Then we will move on now to the other transactions because we have to record how much we received. And it came from the cashier, hence it's CB at November 1. The other transaction on November 1 is that the petty cashier, or in this case as a petty cashier, would record for November 1 what you bought was stationery. All right, and of course, voucher number, you can just put any number, all right, unless they specify, and the amount that was spent for stationery was 11. The next question then we must ask ourselves is, in which of these expense account would the stationery be applicable to? It would not be motor expense. It would be office expense. It would not be cleaning or labor or ledger. And it is pretty straightforward based on what they tell you. So stationery goes to our office expenses. Let's move to the next one. November 3. On November 3, we have H Duff. And voucher number, we just put 2. And the total was $30. Hope you're following up here. Know what we're doing down here. Right? And H Duff, it says labor right there. So we're going to go to our labor column. So there we go. $30 on the labor. Then we move on. November 4, paper clips. Voucher number just continue the same order, 3. And of course, the total is 5. And paper clips goes to the office, right? So office expenses. November 10, we have C night. And C night was 15. So we write that. Voucher number, the total 15. And of course, it's labor. So we go back to labor again. All right, let's go to some more. So we have November 15 now. November 15, petrol, voucher number, just put something there, 5. Then we go on to 33. And of course, if it's petrol, it goes to our motor expenses. Do not go to cleaning, nor labor, nor office expense, nor ledger. All right. So the answers are basically inherent in terms of the type of expenses in the question. All right. November 17th, cleaning. Voucher number, we continue 6. The amount for cleaning here is 10. So we're going to put 10. And of course, it goes on the cleaning, all right, as 10. And we move on November 19, motor repairs. And motor repairs would, of course, come under motor expenses, and the total is 18, voucher number. We continue in the same order, all right, and we go down. November 21, N. Samuels, settlement, purchases ledger. So we put the name N. Samuels. We continue with the voucher number. The total is 20. It says purchases ledger. So we know we're going to go to the ledger account. And for the ledger folio, would have PL. So it's pretty straightforward. It's a given. And we continue like this. And there we go. November 23 now. All right. We have envelopes. All right. So November 23, envelopes, put in the voucher number, put in our total, and then we go down 13 on the office expenses, because envelopes really and truly they go to the office. All right. And the last one we have now is November 25. On November 25, it says K Fletcher, but this time it says sales ledger. So put in our voucher number and the total. And of course, it's going to be SL this time in the ledger folio, and the same ledger account. In that column, we would put 19. All right. So now what we have to do is to bring up the totals. We need to total our thing. All right. So I'm putting more columns and rows. So we put our total line right across there, as you can see, and then we to compute our totals. So for motor expenses, it's 51, office expenses, 29, cleaning 10, labor 45. Sorry, and for ledger account, it is 39. The total from 11 here to 19 is 174. All right, so you can do the calculation as well. Similarly, the total here from 51 to 39 is in fact 74 as well. So the totals there and here would equate to the same 174. All right. Once you're there, once you got that, you know you're on the right track. But of course, we have to close the totals over here. So we draw our double line and we close it. And let's move on. Now, we spent, the petty cashier spent $174 in the month of November. And it was spent from this $1,000. So therefore, the amount that is left from the cash float is $826. So the petty cashier did not spend much at all. Only spent $174 and have $826 left. But of course, we have to continue. This is the balance carried down. And the balance carried down we know happens at the last day of the month, which is going to be November 30. Right? And we have to draw our total lines on both sides. And it's $1,000, 174 plus 826 is $1,000. And then we close the account with the double line, just like normal. As I said, accounts, the same thing we do over and over. All right, same balance carried down. You have to have a balance brought down. And balance brought down is the first day of the next month. And it is also 826 because the balance brought down total is the same amount as the balance carried down total. It tells how much is left after we have spent money from the petty cash book. And we only spent 174 from the petty cash float, that is. All right, so the amount that was spent should be reimbursed at the end of the month. So the amount that was spent is 174. So 174 is then given back to the petty cashier at December 1 and cash, just like there. And of course, we'll have CD as the folio. And that is pretty much how we do the petty cash book. All right, so I hope this video was useful. Stay tuned.